coming up today on LinkedIn News Live. Although it's a tough time to be a job seeker, some states are in a hiring boom. We'll do a deep dive across the nation with the editor of LinkedIn's Workforce Report. And how should retail investors approach market uncertainty? We'll speak with the founder of Bullseye Brief, who says invest in shares with compelling data and a great story. That and more coming up. Hello, I'm Caroline Fairchild, and welcome to LinkedIn News Live, where the business conversation begins with you. It's Thursday, October 1st. Happy October. And here are the top stories that are trending right now on LinkedIn. Airline workers bracing for another round of big layoffs as lawmakers can't agree on a coronavirus relief package for the industry. American Airlines furloughed 19,000 employees on Wednesday and United another 13,000. American Airlines CEO Doug Parker said the announcement would be reversed if a deal is reached. And over in California, Governor Gavin Newsom announcing a new law that will require hundreds of publicly held companies in the state to increase diversity on their board of directors. By the end of 2021, California-based companies will need to have at least one board member from an underrepresented group. Data continues to show that minorities are underrepresented on corporate boards. Meanwhile, new data from McKinsey and Lean In paint a picture of a crisis looming in corporate America for women. 1 in 4 women are considering leaving the workforce or scaling back because of the extra demands created by the pandemic. This reality can have a devastating impact on the progress made in women's representation across corporate America. We saw hundreds of LinkedIn members joining us on the platform yesterday to talk about this data. I want to bring on one comment in particular from Mopta Suri, who said, women are expected to be super women in general, and now with this pandemic, the perspective has not changed, and more tasks have been created in our ever-growing list, e.g. homeschooling. If you ask any of these women, even after quitting their jobs, they're probably still feeling guilty and thinking they are doing enough. For more stories like these, be sure to check out the news module to the right of your LinkedIn feed. If you're on mobile, you can click into the search box. Amid a rough week for job cuts, are there any bright spots? Well, it may depend on where you live. Joining us now is Senior Editor at Large, George Anders, who's going to discuss the latest findings from LinkedIn's Workforce Report. George, welcome to the show.
Thank you. Nice to be on the show.
So location. We know that's important in real estate, but it's also important in the job hunt. What did you find in your reporting?
It's kind of amazing how much of a difference it makes what state you're in. So some of the standout states, Missouri is at the top of the list. People in Missouri have more confidence about how their job hunt and their careers and their finances are going than any other state. Right up there on 2 states in the Washington, D.C. area, Maryland and Virginia. They're benefiting from an abundance of government work, and then also Amazon putting in its second headquarters, and then Texas, because it's Texas. I mean, everyone in Texas has got an ebullient outlook. Turning the lens the other way, we've got a couple states where things are really more downbeat than I would have expected. Oregon is the one where the mood seems most glum, but we also saw some of that in Michigan and in Massachusetts as well.
Okay, but this is kind of counterintuitive to me. Aren't we all working remotely? Why are we seeing these big swings in terms of state by state? What are you hearing from recruiters?
So there's a lot of physical work that still happens. I mean, those of us who live in offices and work on laptops, we start to think that's the norm. But whether it's trucking or retail, safety services, there's a lot of stuff that has to be done physically. And the bounce back rate is going quite differently in states. I mean, if you look at state unemployment levels, right now they're down around 4% in places like Nebraska and Utah, and they're still up as high as 13% in Nevada. So we've got a very uneven recovery, and some of that is being reflected in people's attitudes.
Nationwide unemployment rate remains pretty high. We're at 8.6% right now across the country. But you mentioned some of the bright spots, Texas, the Mid-Atlantic, Missouri. What are these states doing specifically that you think is making job seekers more optimistic during this time?
So Missouri has a really strong apprenticeship program. And traditionally, that's been for the trades. You want to be an electrician, you become an electrician's apprentice. But that's now being expanded to information technology and healthcare, in fields like nursing, in fields like tech support. Coming in and just seeing how someone does it and kind of learning some of the basic tasks is a really good way that people who otherwise might not have all the skills they need to get hired can kind of work their way up the ladder. So Missouri is actually the second biggest in the US after California in apprenticeship programs, even though by population it's not a top 10 state. So they've doubled down on apprenticeships, and that's a pretty successful way of opening doors for people.
You mentioned California. It surprised me in the data that actually California and New York, things are looking pretty dreary when it comes to job seeker optimism. What's going on there?
Yeah, California's still got a pretty high unemployment rate, and California went to shelter in place in a really big way, and it's kind of slow getting people back into the productive economy. Um, and New York, I mean, New York City's got its own unique set of challenges because so much of that high-rise world was built for uh, a setting where you didn't have pandemic concerns. And what you're going to do with people who traditionally have gone into buildings with 30-story elevators, it's not really clear how that part of the economy comes back quickly.
I want to go ahead and say hello to some members who are joining us in the stream right now. Willie from Texas, Diana from California, Cheryl from Connecticut, Ashley from Baltimore, Patricia from Chicago. If you're just joining us in the stream, this is LinkedIn News Live. I'm sitting down with LinkedIn Senior Editor at Large, George Anders. We're getting a look at how job seekers are seeing across the country. I have a question right now from David who says, does it vary by industry in the States? What does LinkedIn data say about that?
So traditionally, we've seen the kinds of fields where you can do it on a laptop. The bounce back is pretty quick. Banking, consulting, certainly software. The fields where everything is in person and in place, much harder. So in fact, I talked with a career advisor in Florida. She's doing a great job of getting her people in healthcare back into the workforce. It's a bit harder for the people in hospitality. If you're working at a resort and all your experiences in lodging and hotels and restaurants, that's still an industry that's having a tough time. So one of the big challenges is for people in those fields, can they take their skills and migrate out into other fields? Because it looks like it's going to be a while until that sector really comes back.
Really thinking about skills right now. I feel like that's the buzzword of this pandemic. Other than thinking about how you can transfer some of the skills you have to other industries, what are successful job seekers doing right now in the pandemic? I see a lot of them joining us in the stream.
So being able to put virtual in front of your job title is a big help. I mean, we've seen this with teachers that, if the classroom is closed, can you be a virtual instructor? We're seeing this with public speakers. That keynote speaker is now a virtual keynote speaker. So some fields, you can make that transition pretty easily. But I'm seeing groups like Toastmasters are now teaching people how to be better Zoom presenters. All of those habits that used to be taught for the buffet are now being taught for the camera. And, it's a transitioning world, but if you can be effective in an online virtual setting, that's going to open up a lot of doors for you.
Maybe I should put virtual in front of my title, as I'm now a virtual news host coming to you from my bedroom right now. Okay, we have another question in the stream. Mike asks, what exactly is Texas job market better than other states? Can we dig into this?
So the Texas reporting that I did, there's a strong sense of community, strong sense of people helping each other. I actually opened the report with a guy who set up a faith-based career support group in his church. The church is closed now, so he's moved it all to Zoom. But I think that sense of neighbors looking out for neighbors is a strong part of Texas culture, and that's helpful. It's also a state that's had growing population, so that tends to create opportunities. There are more people coming in. That means your store sales are going to go up. That means more houses need to get built, more construction needs to happen. Texas has never been a high wage economy, but it's been pretty good at creating sort of bedrock foundational jobs.
And before I let you go, George, we saw at the top of this show this dreary data coming from Lean-In and McKinsey about how women in the workforce are feeling right now. 1 in 4 considering to take a step back. I know in your previous reporting, you've looked at LinkedIn data to see how women are feeling. What is our data bearing out?
So I want to be the house optimist. I'll hold this position as long as I can. We did a study just a few months ago about fields that are going more female than they'd been traditionally. We looked at 560 different jobs, everything from winemakers to historians to 7 different kinds of engineers. And in all of those examples that I just cited, when you look at what the trends were in 2015 versus what they were at the beginning of 2020, women's participation had gone up. So I think there's the long-term trend is toward greater female involvement in all levels of the workforce, including high-paying managerial jobs. It looks like we've definitely got a hiccup now, but let's hope that that is relatively short-term and that we can get back to a world where more doors are opening for women.
Well, George, I certainly appreciate that optimism, and I know many members in the stream do as well. If I can't sit next to you in the office anymore, I enjoy speaking with you virtually like this. Thank you for joining us on LinkedIn News Live.
It's been a pleasure. Thanks, Caroline.
That was LinkedIn Senior Editor-at-Large George Anders walking us through the latest workforce report. If you follow him on LinkedIn, you can get that in your inbox every Thursday. Okay, the stock market has held relatively strong despite Main Street fears here in 2020, but the encroaching election is causing volatility. Conventional advice says buy the dip, but does that still apply when the world's in the midst of a pandemic? I want to bring in Adam Johnson, founder of the Bullseye Brief. First, we have to tell our members that any reference here to an investment, past or potential performance is not and should not be construed as a recommendation or guarantee of a specific outcome. Now that we have that out of the way, Adam, welcome to the show.
Caroline, thanks for having me, especially on a day when there's actually some green on the screen. It's a nice change from what we saw last week.
Well, let's start there. Walk us through the green on the screen. What's going on in the market today?
So I think what we have is a tremendous amount of optimism because we actually realize that, while these elections are difficult, while debates are ugly to watch, the fact is at least we're going to get resolution and we're going to somehow get through this whole thing. There's stuff that actually matters a lot more right now than politics. You have rates at incredibly low rates. Think about it. You can go out and get a 30-year mortgage right now for 3%. It's incredible. We've never seen that before. It's why housing sales are setting new records. I know that there are headlines about people getting laid off at Disney and today on the airlines, maybe 30,000 people. And yet somehow unemployment has come down to like 8.2% from 12 or 13%. It's not a straight line, but we're doing better. And I think what's happening is that the market is just reflecting the fact that there's more to like right now than to dislike.
Let's dive a little bit deeper into what you're saying about mortgages right now. LinkedIn released its top startup list last week, and the number one company was Better, which is an online mortgage startup, which is just seeing so much growth right now. They're hiring thousands of employees. What's going on in real estate? Why are people investing there?
Well, think about it. If you can get a 30-year fixed rate mortgage at 3%, that works out to about, call it 400 and, well, actually I've run the numbers exactly. It's $432 a month. And that, by the way, is before the deduction. Let's say you go out and you buy $1 million house, you get $1 million mortgage. That's $4,300. The average rent in New York City is around $3,000. And once you take out the deduction for the interest, that $4,300 drops down to about $3,000. Now, okay, that may sound like a lot of money if you're living in Columbus, Ohio, but for cities like New York, for San Francisco, even Dallas, Chicago, Boston, that is an incredibly reasonable number, and your money's going a lot farther than it used to. 3% is incredibly cheap, and again, that's what's driving record house purchases. You also have a situation where for a number of years, millennials were living at home. They couldn't necessarily afford to go out on their own. So there's been some pent up demand. While COVID hasn't necessarily made it easier to go out and stand up, you can only hold people back for so long. Whether it's housing, whether it's stocks, you can only hold people back so long. That's the good news.
Well, Adam, I'm seeing some more members joining us in the stream for your tips and tricks. Ravichandra from New York, Dolores from Texas, Jamie from Washington, D.C. You talked about in the beginning of the segment some optimism that we're seeing in the markets right now, but there obviously have been some dips throughout this pandemic. You've bought during those dips. Why?
Well, I'm, the eternal optimist. So I will probably give you reasons to buy on just about any day. But there's actually something that I like to look at specifically. And I don't want to go too far in the weeds or what's the expression, inside baseball. But there are a couple technical indicators that guys like me look at. And you're looking at the S&P 500 right now. And I've circled some of those lows that were buyable dips. And there was one thing that all of those three lows had in common from March to June to September. And that was, if you look at the 500 stocks in the S&P 500 index, which is pretty much the benchmark for the market, at least 95% of those companies were trading under their 1 month moving average. In other words, it was a washout. Stocks had gotten hit so hard that, again, 95% of the stocks in the S&P 500 were trading below their 1-month moving average. So that's the kind of indicator that I look at that helps me feel confident about going in and buying. I was buying each one of those dips, and if you look back in March when it just kept going down and down and down, I was buying the whole way down. It was very uncomfortable, but it turned out to be the right decision. And almost any time you have a sell-off of that magnitude, buying, which I know is so hard to do, ends up being the right decision in the long term.
And I follow you on LinkedIn, and your whole thing is American ingenuity. Where does that take you when it comes to the stocks that you're picking during this pandemic?
Well, I mean, in a nutshell, to me, American ingenuity is a story about the people and the companies driving the world forward. It's something I can get excited about. It's often technology, biotechnology, medical technology. Funny how there's a technology word in all these descriptions. But again, growth type companies. And I look for three things, Caroline. I look for a great story, right? Something that just excites me. I look for compelling data that supports my thesis. And finally, I look for probably something you can appreciate, a newsy hook, something whereby we're already kind of talking about it anyway. There's some sort of catalyst there. It might be a theme like working from home and software companies that help us do that more effectively. It might be 5G and communication companies that are making that happen. It might be artificial intelligence or robotics. Any of these themes that, again, we're already talking about, they sort of become catalysts that help drive the stock. So again, the three things: a great story, compelling data that supports that story, and a newsy hook. Those three things, that's what I like to look for.
Any specific companies come to mind when you think about having all three of those things right now for you?
Oh gosh, yeah. And I'm thrilled to talk about individual names. I've got 33 in the portfolio, the Bullseye American Ingenuity portfolio. A new pick comes out every week, and I love talking about this stuff. Upland Software, UPLD, which is like the McKinsey consulting of the software business. It helps companies streamline their operations, helps people work from home. So does Rapid7, which is about cybersecurity. Again, as people work from home, their computers are less safe. A company like RPD is the ticker, Rapid7 is the name, ranks number one in 3 out of the 4 categories that it serves. And that ranking, by the way, comes from Gartner Research. It's not just me talking, it's Gartner. In the Magic Quadrant, those guys are number one. RPD for cybersecurity, Upland Software for streamlining software and facilitating working from home. I mean, these are the kinds of names that are exciting. I could give you some of my biotechs, like Iveric, ticker ISEE, that is in a late stage phase 3 trial right now to address macular degeneration, the leading cause of blindness around the world. We're going to get data from that company within the next 6 months. That's exciting. This is American ingenuity. This is what I do.
You told us earlier on that you are the internal optimist, but when do you not buy? There have to be moments when you're not eager to pick up more stocks.
So, not everything works. Just recently, the wonderful oil company, WPX Energy, which was in the news because it's merging with Devon, they sold this thing at $5. Are you kidding me? That's so upsetting. I mean, I bought this down at 4.5. Okay, so I made a little bit of money at 5, but my target was 15. I'm selling it just because I don't like this merger. And it really gets to that little example, it just gets to one of the things that I think is really important for anyone who's buying a stock. My boss told me, my first trading boss, you're only rational once, and it's before you buy the stock. So before you buy the stock, set a target. In other words, what you think it's going to be worth. In this case, WPX, I thought it was worth 15, fine. And then an alert, a stop loss on the downside where you say, this isn't going to plan. I thought it was going to 15, but it's not. My downside alert was 4. It didn't go back down to 4, but there comes a point at which you just say, I think I'm going to make more money elsewhere. I'm better served selling this thing that didn't quite do what I thought and redeploying the capital into something that's just more exciting. So I think it's very important to both set a target on the upside and set a limit on the downside. Maybe that downside is down 10%, maybe it's down 20. It depends upon your own risk tolerance, but you got to have some sort of limit.
And I'm seeing some questions on the stream that I want to get to. And Ziba is asking, how long will the interest rates will stay low? If you took out your crystal ball, what's your take?
A long time, Ziba, a lot lower or a lot longer than I would like to see. And I say that because even though low rates, stimulate house buying, and it makes going out and getting a car cheaper because your car payment is lower, student loans lower, all that's really good. But the problem is when rates are artificially low, and I say artificially low, they're being held down, okay, to make it easy for all of us to get out of this crazy mess, and that's okay. But when you keep rates down for too long, what you ultimately do is sort of encourage bad decisions. Maybe you take out a bigger mortgage than you should. Maybe you buy a second car, or lease a second car when you really shouldn't. But rates are so low, you just figure, why not? Or you're retired and you put your money to work for you, and because rates are so low, you can't get any returns. So it's very hard for retirees right now because they have no income coming in. So yeah, low rates are going to stay low for a long time because the Fed has said we need to get this economy back on track, and that could take 2 to 3 years. So lower for longer is the mantra on rates, but just recognize somewhere down the road there'll be a reckoning that we'll have to deal with. You probably don't have to worry about that until 2023.
I can't believe that we were talking about perhaps leasing a second car when before this pandemic, car ownership was under question totally. Adam Johnson, founder of Bullseye Brief, thank you for joining us on LinkedIn News Live.
Thanks, Caroline.
Tomorrow we have you with Get Hired Live at 12 Eastern. My colleague Andrew Seaman will be speaking with Chelsea Jay on building a career with purpose. That's at 9 Pacific, 12 Eastern. I'm Caroline Fairchild. Thank you so much for watching LinkedIn News Live.